Decree 132 regarding related party transactions. On November 5, 2020, the Vietnamese government officially issued Decree No. 132, 2020, NDCP replacing Decree No. 20, 2017, NDCP prescribing tax administration for enterprises engaging in related party transactions. Decree 132 will take effect from December 20, 2020 and be applicable to the 2020 corporate income tax year. In this newsletter, Deloitte Vietnam summarizes the key provisions and changes in Decree 132. Firstly, Decree 20 stipulates that subjects of application include organizations engaged in production of and trading goods or services, hereafter referred to as taxpayers, which are paying the corporate income tax by the declaration method and carrying out business transactions with related parties. Decree 132 expands these subjects of application by removing the term by declaration method. Therefore, it may be implied that taxpayers who do not pay CIT by the declaration method, example, foreign contractors, may be covered in the subjects of application of Decree 132. Second, Decree 132 supplements Relationship Type L, related party relationship between individuals and enterprises. This supplement may give rise to additional declaration of related parties and related party transactions in comparison with provisions of Decree 20. Third, under Decree 132, the lower threshold of the arm's length range has been uplifted from the 25th percentiles to the 35th percentiles. Since Decree 132 shall be applicable to 2020 CIT period, taxpayers might need to review their currently applied pricing policy. In the context of 2020, where enterprises in several industry sectors have been negatively impacted by the COVID-19 pandemic, tightening the arm's length range would likely pose remarkable challenges in 2020 transfer pricing compliance. Fourth, Decree 132 retained the regulation relating to deductible net interest expenses in determination of corporate taxable income in Decree 68, 2020, NDCP issued on June 24, 2020, including the retrospective application for fiscal years 2017 and 2018, and carry forward of interest expenses in excess of the cap over the next 5 years. Fifth, Decree 132 stipulates that taxpayers that are exempted from declaration of Part 3, Part 4 in Appendix 1, is also exempted from preparation of TP documentation in case the taxpayers meet the criteria listed. This provision may bring about a fair relief on related parties' filing requirements to various taxpayers in the time to come. Sixth, Decree 132 prescribes detailed responsibility of the taxpayers relating to country-by-country report, CBCR. However, the CBCR filing requirements in Decree 132 are relatively complicated, and there are various branching provisions to specific cases. Thus, taxpayers should resort to specific provision for specific case of the global ultimate parent company to correctly determine the CBCR filing requirements. In addition, Decree 132 also states that CBCR shall not be used for tax adjustment. Seventh, Decree 132 prescribes that deadlines for taxpayer to provide TP documentation in tax audit/inspections is in accordance with law on inspection. In line with the prevailing regulation on tax inspection/audit, the taxpayer is obliged to provide supplement document and information within no more than 10 working days from the date of receiving the tax authority's request. Accordingly, this deadline has been shortened as compared with the provision in Decree 20, which is no longer than 15 working days from the date of receiving request from the tax authority. Therefore, enterprise shall plan to prepare and maintain the TP documentation properly to comply with the submission timeline. Eighth, under Decree 132, the likelihood of successfully applying and being accepted commercial database by taxpayers can in theory be remarkably improved. However, in case the taxpayers fail to comply with the current regulation, as listed in Article 20 of Decree 132, tax authorities shall still have the right to make tax adjustment using tax authorities' databases and the commercial database. Besides, Decree 132 further clarifies the scope of comparability analysis for related party transactions with particular or exclusive nature that cannot be compared to any independent subjects. Deloitte will continue sharing with you further studies and analysis on the impact of the Decree 132 in the near future. Should you have any questions or need any assistance, please contact our Deloitte Vietnam tax specialists for timely actions.